When stock and bonds move opposite direction, what does it mean? We have observed a divergence between the stock and bond markets since 2020. While US Treasury bonds enter a bear zone, the stock markets continue their upward climb. What are the implications of this decoupling? Will the stock market resume its uptrend and hit new highs, or is this merely a retracement before further downward pressure? My name is Con Hao. My work in this channel is to study behavior science and finance, discover correlation between different markets, and uncover potential opportunities. This analysis is based on technical studies and does not constitute financial advice. Please consult your licensed broker before investing. A healthy three-way interdependent relationship occurs when the economy, the bonds, and the stocks move in the same direction. When investors have confidence in the US economy, they tend to invest in long-term bonds, which is usually will benefit the stock market. This alignment was evident between the year 2000 and 2020, during which bonds and stock moved largely in tandem. However, from 2020 onwards, bonds began declining, signaling a loss of investors' confidence in the economy. Technically, this should exert downward pressure on stocks as well. Yet, we are witnessing a divergence where the US Treasury bonds have fallen while the stocks have continued to rise. When such a divergence surfaces, it signals the need for cautious in our approach in the stock markets. In our early March case study, we noted that the US equities were at a crossroads. Since the launch of ChatGPT, we saw how the market has performed despite the divergence. Therefore, as the stock market continues its climb, I remain cautiously bullish. My plan was on any break below this uptrend line, it could signal a potential change in trend. At that time, this view was formed without the knowledge of the Liberation Day tariffs. But now, let's see its outcome. With this technical break alongside with this significant shift in fundamentals, what is your analysis? Will the stock market resume its uptrend and hit new highs, or is this merely a retracement before further downward pressure? Let's also visit how we apply this quantum-mental approach, blending fundamentals with technical analysis back in 2022. Then I identified this uptrend that was broken despite Jerome Powell kept saying the inflation was transitory. And we saw how the bear established itself for the whole entire year of 2022. As of now, with this recent break below the uptrend line and with these fundamental a shift away from rule-based globalization, my current strategy will be sell on strength when opportunity arises. What could be the other reason why the US bonds have peaked in 2020 and depreciated by 44% since then? I would like to hear your thoughts on this. We cannot perfectly time the market, but it is possible to get the market timing right. The market are always telling us on their next move. Stay tuned for my coming tutorial. Remember to subscribe to my channel. Join us in our weekly case study and discussion. Click on my profile icon or description below to find out more. Feel free to leave any comments below. I love to exchange ideas with you on what is about to come. Really happy that you stayed through this tutorial. You have many great training weeks ahead.